In this video, I will test a really interesting 5-minute scalping strategy sent by one of you guys to find out how much money we could potentially make with it after 100 trades. For this strategy, I will set my initial account size at $1,000 and we're going to be risking 2% of our account per trade in order to make 3. I will also try to improve it in a second part of this video, so stay tuned for that. Okay, we're currently looking at the price of crude oil 5-minute time frame, and now let's go ahead and add our indicators. For the first indicator, let's select Super Trend. For the second indicator, we're going to need to add an exponential moving average. And for our third indicator, let's add a squeeze momentum oscillator. This one by Lazy Bear. Now we need to change the length for our EMA. So let's set it at 200. We're going to keep the rest of our indicators on a default settings. Now let me briefly explain how these indicators work. So first, let's start with Super Trend. So it's basically an indicator quite similar to moving average convergence divergence, or MACD. If you're already using other indicators, it's quite simple to follow this one. Based on the parameters of multiplier and period, the indicator uses 3 for multiplier and 10 for ATR as default values. The average true range is represented by the number of days, while the multiplier is the value by which the range is multiplied. This indicator will help us identify the short-term momentum in the price movement. The next indicator I want to talk about is the exponential moving average. So the EMA is a technical chart indicator that tracks the price of an investment, like a stock or commodity, over time. The EMA is a type of weighted moving average that gives more weighting or importance to recent price data. This indicator will basically help us to filter out all these bad signals. And finally, we've got this squeeze momentum indicator, which measures both volatility and momentum to spot trading opportunities based on volatility changes in the security. The volatility component of the indicator, the squeeze dots, signals potential breakout after periods of low volatility. Based on this indicator, we're going to be entering long or short positions. Okay, now let's understand how to trade with this strategy. Okay, so for a long position to be valid, the price has to be closed above the exponential moving average, the super trend has to be green, and the squeeze momentum indicator has to either turn from red to dark red or from dark red to green. We're also going to be waiting for a second dark red or a second green histogram appeared on an indicator before we can place a buy order. We see this long signal was not valid because the price was below the EMA and the super trend was red. So we waited a little bit more, and this is where we had a valid long entry. So we're going to place a buy order at the close of our trigger candlestick. Our stop loss will be set at the super trend line, and we're going to be targeting 1.5 times the risk. Exactly opposite rules apply for short trades, so we're only going to be looking to sell if the price is closed below the exponential moving average, the super trend is red, and the squeeze momentum indicator either turns from green to dark green or from dark green to red. We're also going to be waiting for the second dark green or second red histogram appeared on the indicator before we can place a sell order. Here we see we've got our requirements met, and this is going to be our trigger candlestick. Our stop loss will be set at the super trend line, and we're going to be targeting 1.5 times the risk. Also, I want to give you a couple more important examples where you wouldn't have taken a trade. So first of all, I would avoid any signals like these where you can barely see the histogram. These signals aren't strong enough to have a valid confirmation. Also, if you have a new signal issued by the squeeze momentum indicator but the super trend is still green, you do not wait for it to catch up. You just skip this trade altogether. I also noticed that this strategy is pretty good at eliminating losses. We see none of these signals were valid. For example, here we had a long signal issued by the squeeze momentum indicator, but the super trend was red. Obviously, we can't take any short positions since the price is above the EMA. This long signal was also not valid because it wasn't confirmed by the super trend. Okay, so let's actually do our backtesting and see how much money we could potentially make with this strategy. Okay, just done the backtesting, and as we can see, the strategy is not that bad. Our win rate is 55%, and we increased our account size by 104.75%. I found those 100 setups within 2 months. The only thing I don't like about this strategy is the potential drawdowns we could have. Sometimes we had 5 losses in a row, and I'm not saying that's bad, but we could definitely make this strategy a bit better. The profit factor is 1.83, and we had 7 consecutive wins against 5 consecutive losses. So overall, the results are pretty good. Let's thank SimpEdits for sharing this amazing strategy. And now I'm going to try to improve this strategy by replacing some of those indicators. So first off, let's get rid of the super trend and the exponential moving average. Now let's go into our indicator section and search for Super Ricci. This indicator by Lux Algo. And for the second indicator, let's add a regular volume. Now let's add a moving average to our volume indicator. And set the length at 30. And the reason I did this is because the Ichimoku indicator pretty much consists of the super trend and the exponential moving average. And by adding a volume indicator to our chart, we can eliminate even more losses. The Ichimoku cloud will serve us as an indicator for a longer term trend. So if the price is below the cloud and the cloud is red, we're officially in a downtrend. And if the price action is above the cloud and the cloud is green, we're officially in an uptrend. And these two Ichimoku lines identify the short-term momentum in the price movement. If the blue line is above the orange line, we have a short-term upward momentum. And if the orange line is above the blue line, we have a short-term downward momentum. Okay, so we're only going to be looking to buy if the price is above the Ichimoku cloud, the cloud is red, and the blue line is above the orange line. The squeeze momentum indicator has to turn from red to dark red, or from dark red to green. And again, we're going to be waiting for another candlestick. And the volume histogram has to be green, and it has to be above the moving average. We see here we have all our rules met, and this is going to be our trigger candlestick. Our stop loss will be set at this orange line, and we're going to be targeting 1.5 times the risk. If the price is really close to the orange line, we can place our stop loss at the recent lowest price. Okay, so we see the price gapped and triggered our take profit target on the very next candlestick. Exactly opposite is true for short trades, so we're only going to be looking to sell if the price is closed below the cloud and the cloud is red. The orange line has to be above the blue line. The squeeze momentum indicator has to either turn from green to dark green or from dark green to red. The second histogram has to be the same color, and the volume has to be bearish and it has to be above the moving average. Our stop loss will be set at the orange line, and we're going to be targeting 1.5 times the risk. Also, if the price is inside the cloud, you do not take the trade. Also, you wouldn't enter a short position if you had, for example, your Williams indicator lined up, but the Ichimoku lines haven't caught up yet. So you do not wait for them to catch up, you simply wait for a new signal. Also here we see we had a long signal, but this signal wasn't confirmed by the volume indicator. We see the histogram was bearish. And again, you do not wait another candlestick for it to catch up. Okay, I hope you have understood the rules for this strategy, so let's actually do our backtesting and see if the results are any better. Okay, what have we got here? So the win rate has increased by 10%, it's 65% now, and we increased our account size by 236.77%, which obviously tells us that this strategy works much better. Also, we have no signs of any serious drawdowns at all. The profit factor for this strategy is 2.79, and we had 13 consecutive wins against 3 consecutive losses. But I must say, it took me a bit longer to find those 100 setups. I found them within 4 months. And if you're trading multiple securities with this strategy, this number right here could be much higher. So feel free to backtest this strategy on other markets and other timeframes as well. Okay traders, I hope you enjoyed this video. Don't forget to smash the like button, it really helps with the channel. And also if you want to see more strategies like this in the future, then feel free to subscribe to Trade IQ.